Similarly, on the item, we add the quantity based pricing, right? So if I open a particular item, so here we add that, right? Maximum of quantity based pricing levels. What should be the quantity based pricing levels? 5. We have defined it here, right? So if I open that item, it will have 5 levels of quantity based pricing. Okay, so if I go to that particular item, and if I scroll down under sales and pricing, we have 5 levels of quantity based pricing, right?
Yes.
Okay, so if I make it here 3, I'll be able to enter only 3 levels of quantity based pricing. Okay, so the number that we define here defines the quantity or the levels that can be defined on a particular item. Okay.
Okay.
Similarly, allow quantity discounts per price level on schedules or not. So there are various schedules that can be defined. So in case if you want that price levels or discounts depending on the quantity, you can define that. Similarly, include reimbursements in sales and forecast reports or not, whether we want. So whenever there are any forecast reports, so in case if we do any reimbursements or whether we have any shipping charges applied, whether that should be included in the forecast reports or not, this is defined here. Similarly, what are the transactions that we need to exclude from the sales report? Sales reports are nothing but it will have all the sales transactions such as sales orders, invoices, credit memo, and all those stuff. So in case if we don't want the sales orders to be there in the sales report, I only want the invoices and credit limits, credit memos. So we can select the transactions that should be excluded from the sales report. Similarly, what are the transactions that should get you can say excluded from the forecast reports? That can be defined here. Charge based billing, this is a part of another module, so we'll not go through that, but we'll go through the inventory related stuff. Whether we want to have whether we want the scanning to be done for the individual items or not. So in case if we have any advanced inventory module, so there in that case whether we want to use preferred bin all the item receipts or not. Are you aware of the concept of landed cost?
No.
Not really, not the taxes, but for example, I want to buy a chair, right? So the cost of that chair is say 1,000 rupees. Okay, but it might also include, or it might also require some freight charges, maybe say 50 rupees. It might also require some handling charges, maybe say 20 rupees. Okay, so the cost of that item is 1,000 rupees, but I also had paid 70 rupees extra for its freight and handling. So it defines whether my cost of that particular chair should be 1,000 rupees or it should be 1,070. So if we want that to be shown as 1,070, then we can apply the landed cost for a particular item. So that is nothing but, in case if we apply landed cost for a particular item, whether we want that to be included in the last purchase price for a particular item. So in that case, if we want, we can check this particular checkbox. Similarly, whether we want the lot numbered items to be printed on the transactions by quantity, we can check these checkboxes. Similarly, the cost category, there are various cost categories. Okay, these can be selected on the item as well, whether we want the costing method should be average, FIFO, LIFO, or standard. Do you understand what do we mean by that?
No.
Okay, so there are various costing methods available. Average is nothing but, so for example, I brought a chair today at 1,000 rupees. Okay, but tomorrow I brought the same chair at 1,100 rupees. Okay, so I have two chairs in my stock. One is for 1,000 rupees and the other one is for 1,100 rupees. Okay, so if I use the costing as average, so my total or the average cost for that particular item would be 1,050. Do you understand what do you mean by average?
Yes, yes.
Similarly, FIFO, first in, first out. So what it will do is, first I bought that chair at 1,000 rupees. Okay, so the first cost of that particular item, if I sell it, would be 1,000, and the second one would be 1,100. Same for LIFO, last in, first out. So the first one would be 1,100 and the second one would be 1,000.
Yes.
And the last one is standard costing. Standard costing is nothing but when we went through the you can say the accounts, you might have seen the various variance accounts. Okay, variance accounts, cost variance accounts and other stuff. So generally the standard costing is used when when some customers or organizations use manufacturing, or they might be into wholesale distribution. So standard costing is nothing but it gives me the variance. So for example, the standard cost for the chair is 1,000 rupees. Okay, so if I use standard costing and if I buy that chair today at say 1,050, so what it will do is it will still keep the cost of that particular chair to be 1,000, and it will put the remaining 50 rupees to the variance account. Okay, similarly tomorrow the cost of that particular chair has reduced, say it is 970 now. So what it will do is it will still keep the standard cost of that particular item to be, or chair to be 1,000, and it will put the minus 30 to the variance account. So this is nothing but the standard costing. This is generally used wherever there are very you can say, or the price of the raw materials vary on a day-to-day basis. Do you get that?
Yes, yes. No issue.
Okay, so do you get what are the costing methods?
Yes.
Average, FIFO, LIFO, and standard.